Hi everyone, this is Hector. Today is Thursday, the 6th of December 2007. Today, well, actually all week long, Tuesday, Wednesday, Thursday, and tomorrow either, I've not been trading due to the high number of economical releases that we've been seeing as far as the interest rates goes. We've had the interest rates coming out this week for the GBP, the Euro, the New Zealand dollar, the Australian dollar, and the Canadian dollar. And moreover, we have tomorrow the non-farm payrolls, and next week, I think it's next Tuesday, we have the also the interest rates from United States. So, like I said, it's just too much rolling into the market for me to consider any trade. I'm always, very apprehensive to enter a trade whenever there's just so many releases coming out at the same time or within a very short period of time span. It's very difficult to trade from a fundamental analysis point of view. From a technical analysis point of view. I am a technical trader myself, and I find it rather difficult. When I know that I have to navigate my trades through so many announcements. Okay. Anyway, today we've had the interest rates from Europe and England. The Euro. The interest rates for the Eurozone have remained unchanged at 4%. However, the interest rates from England, it was some sort of surprise. The analysts expected the interest rates to remain at 5.75, whereas, the Bank of England has decided to reduce it down to 5.50. However, I've been seeing I've been looking at my charts, trying to see the reaction of the market to those, to that surprise, to that unexpected outcome, and I'm seeing some sort of, contradictory. Market behavior, depending as far as the sterling pound goes, depending on the different all the currencies. For example, if we look into the GBP against the American dollar, the cable, basically we see that price is been moving sideways all day long, despite the fact, like I say, that the GBP. The interest rates, has been reduced as opposed to what the market as a whole and the economical analysts had expected. I would have expected to see a nice drop down. A 200 pip drop down. We usually see quite a heavy move on whenever we get a surprise on the interest rates announcement. However, in this case, the move today for the GBP against the American dollar it's actually been lower than the average daily range, and moreover, it's been moving flat despite the release. Here we saw a little bit of a drop down, but then immediately after it's come back up. Okay, and from there it's just been meandering sideways. Very strange price action. Moreover, if we look into another sterling pound cross, in this case against the CHF, pretty much more of the same, really. A lower trading range today as compared to the average daily range. That means, check this out. It means that today, despite the fact that we've had a surprise on the most important announcement throughout the month, as far as the economical calendar goes, still, despite the surprise, we've moved less than what we usually do from a statistical average. That makes no sense whatsoever at all. I don't get it. Moreover, as well, another sideways outlook. Okay, seeing the drop down as the in the following hours up on the release, but then a retracement back up. And actually we are this is the beginning of the day, and right now this is the close, so we are actually seeing a slightly bullish day in the daily chart. Okay, if this was the daily bar, we actually would see a green bar. Quite really, I mean, very surprising as far as I'm concerned. We should have seen a much larger move to the downside. Moreover, if we look into the GBP against the Japanese yen, this is even more surprising. The news came out immediately after it drops down 100 pips, but from there within the hour, please remember that this is the 1 hour time frame, and therefore this signifies, this red signifies just 1 hour worth of time, and from there it's just shot back up. I just don't get it. I mean, really. So the Bank of England decides to lower the interest rates on its currency, and the sterling pound appreciates against the yen. All right, well, whatever. And then if we have another look into into another currency cross for the sterling pound against the Australian dollar. Okay, in this case, we can see a normal and expected price action. Okay, a very nice drop down for over 200 pips. Thanks God, one of the sterling pound crosses is making some sense. Also against the New Zealand dollar, and over 300 pip drop in this case. Well, another chart that makes sense. However, if we have a look into the euro against the sterling pound, another pretty flat day. We see the move up as the news on the sterling pound were released, but from there a little bit of a retracement. And considering this was the open of the day, this is current market price, meaning the close. This is the high, the low, and well, if you link that up, you some sort of get spinning top a doji as far as the daily bar goes, which means basically sideways price action, and as well lower trading range than the average. Oh well, what can I say? So it's in some currency crosses, the outcome from the news have made some sense, such as in the case of the GBP against the New Zealand dollar and the GBP against the Australian dollar. Okay, with those nice drops down as expected, as they should, considering now that the that the interest rates have been lowered by surprise. However, against the JPY, the sterling pound has actually rallied. I have no idea how this is possible. You see, this is the reason I usually like to, first of all, not to try it on the days the interest rates are being released, because the outcome is always rather unexpected, and the and you never know how the market may react upon the outcome, okay, upon the actual data, and also. It's another, it's the reason I don't like to trade through fundamental announcement, major fundamental announcement. I like to sit out of the market whenever a major news are about to be released, such as the inflation data, the unemployment data, the trade balance, retail sales, whatever. I usually don't like to sit through the news. I don't like to enter a position 1-2 hours before the news. I like to wait it out, and once the news come out, I let the market move to wherever it wants to go. I don't have to do any guesswork. I don't have to I don't have to expose my positions to the news. In this case, I'm sure many people have lost money, expected to the GBP to basically drop down a big deal, and instead of that, we've had a flat day, a sideways ranging day. I'm sure many people who've tried to trade the news, they shorted up on the news, expecting, like I say, a big, nice red bar on the daily chart, meaning a bearish day for this kind of setup. And instead of that, have a look, totally flat price action. Anyway, guys, this is all for this video. Just to show you my my overall confusion as of how the price has reacted to the news. Bye bye.